I'm Charlotte McLeod with the Investing News Network, and here today with me is Jamie Keech, co-founder at Resource Insider. Thanks so much for being here.
Yeah, thanks for having me today, Charlotte.
Yeah, of course. And since this is our first time talking, I wondered if you could start by telling me a little bit about your background and what you do in the resource space.
Yeah, well, I mean, first and foremost, I'm a mining engineer. I've spent the vast majority of my career working on mine sites and development projects. I spent 3 years recently working for a company that now has become Equinox Gold in corporate development, so I was involved in a large series of mergers and acquisitions to help build that company up. For the last 18 months or so, I've been working for myself at essentially a investment newsletter called Resource Insider. And Resource Insider is very simple. We have subscribers. They pay us to help them find great investment opportunities in the mining sector. Anything that we look at, I invest in on the same terms as my subscribers if they so choose to invest. And our goal is to find great ways to make money in the space, really.
We're here right now at the Precious Metals Summit. You were speaking earlier in the show. The mood seems good to me, but what is your sense? I'm sure you've been speaking with lots of companies. What do you see?
My sense, the mood is definitely good. I would say it is hopefully optimistic because, while we're seeing a pretty good run over the last year in gold price, I think it's up something like 30% in the last year, we're not seeing the multiple you would traditionally expect in the equities, right? So, I think equities are up by 20-30% as well. They're sort of mirroring gold price, but that's unusual, or that's anomalous insofar that they should be trading at a multiple. So if you think back to 2015, what happened when we had this little 20% run in gold? There were junior exploration companies that were tripling overnight. So we were getting, massive returns in the equities compared to gold price. And we're not seeing that today. So I think there's this sense of people waiting for that to happen. And in my view, for that to happen, I think generalist investors are waiting to figure out or to decide if this gold run is real, if the situation in the world warrants a higher price of gold before they pile into the space. I'm of the opinion that that's going to happen in the next 12 to 18 months. We'll see, but that's what I'm thinking, and I think there are a lot of people here at the conference today that are at least hoping that that's what's going to happen as well.
Okay, so 12 to 18 months for a kind of a real gold price rise type of thing.
Well, we're seeing a real gold price rise,
sure.
but I think we're going to see equities catching up to that. And the first ones we're going to be seeing that in are the safe, stable, predictable bets. And I think royalty companies and streaming companies are going to be a good example of that. Of course, producers, and then it's going to trickle down through the ecosystem, and that means the next will be the development assets. That there is a known, quantifiable resource there that maybe needs a higher price to realize that value. And then, of course, there are going to be the exploration companies and all the speculation and the high potential upside or downside associated with that.
Do you have a sense of where gold may be going in those 12 to 18 months?
So I think when people set price for this, they are guessing, even if they don't realize that they're guessing. But I do think that there's no reason to think that gold should not hit an all-time high in the next couple of years. The situation that the world is in today is extremely chaotic, and I can't predict the future and certainly don't have a crystal ball, but I don't see that calming down in the foreseeable future, and I see that being reflected in the price of gold.
What types of companies are you looking at right now? Are you looking at those ones that you would see moving first, or a mix?
So that's a good question. We look at a range of companies. So in Resource Insider, we're focused on private placement opportunities. Often that is earlier stage companies, either in the exploration stage or in the development stage. In my personal profile, or portfolio rather, I'm invested in royalty companies. I'm invested in developers and engineers. I don't have a lot. In fact, right now I don't have any senior producers. I don't see the growth profile there that I'm looking for, but I am in smaller producers and mid-tier producers. So a good example of that is Northern Vertex, which is a medium-sized gold mine out of Arizona. I think it's massively undervalued. We invested in that in January. We've seen that go up something on the order of 30% in that time, and I think it's got a lot of way to run in it. I'm also invested in Sand Spring Resources. I'm not sure if you're familiar with that. It's a massive, massive 10 million ounce deposit down in Guyana. I just participated in a financing that they did. I think they need $1,400 gold to be profitable, and we have that today. And I feel like they're trading like an option that is out of the money, but they're actually in the money, and people haven't cottoned onto that yet. So it's only a matter of time until, in my view, the real value there has been realized. So those are some examples. Yeah.
Okay, and so you're actively investing right now in this market. It's not like you've already amassed your portfolio and you're just waiting.
So we've been, at least through Resource Insider, been building this portfolio for the last 18 months. I mean, I've personally been doing this for just over 2 years now of like really focusing on building out a gold portfolio. But yeah, we're still going. I don't think we've seen the gold equity market go anywhere near where I anticipate it going. And I think we're on the last cusp of being in a good buying opportunity now.
So that's a lot of great information on gold. But what else are you looking at right now in the resource space? Other commodities, that type of thing?
Yeah, I mean, officially we are commodity agnostic. And I mean, my partner, a gentleman named Chris, he is a macro investor. He's very focused on gold as well as several other commodities. I am a mining engineer. I'm typically looking at projects from the from the project level to see that will make money at current prices, regardless of broader macroeconomic events. But things that we are looking at in detail, for example, is nickel. We haven't made a nickel investment yet, and I'm very, very aggressively searching one out. And we're looking for a nickel sulfide deposit. They are few and far between. There are few companies that I feel are going to give us the torque that we're looking for. So that's something we're spending a lot of our time looking for right now.
And would that be because of the battery angle surrounding nickel?
Absolutely. Yeah. I mean, that's our driving force. My macro view on this is very simple. I don't see us having less batteries. I think this, obviously the electrical vehicle revolution is going to happen, whether people want that or not. And nickel really is the battery metal. It's fine to talk about cobalt and lithium, and obviously those are important. And we've seen those those big jumps in those commodities due to the tiny size of those markets. But batteries are mostly nickel. So that's why we're looking at it.
Okay, perfect. I think I will wrap up there. I have one more question, though. As we head into the last months of the year, what would be your best piece of advice for investors?
My best piece of advice for investors? I guess my general piece of advice for investors is to do your due diligence. And, this is mining, it's high risk, and it's great that things are looking optimistic right now. But, always be cautious. Things can change very quickly, and you should be investing in people you trust and with people you trust. And if you don't convince yourself you understand more than you do about the technical aspects of projects. It's a very dangerous trap to fall into. And not only do you see a lot of amateur investors doing this, you see a lot of professional investors doing this too. So find good technical and financial advice and people you can trust, and then take that advice and be cautious.
All right, well, thank you so much. That's all for me. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jamie Keech of Resource Insider.